still growing. But now, if the projections for SMR growth takes place in the US market for nuclear generating capacity will double, okay, in the next 20 years. China is talking about building 150 new nuclear reactors over the next 15 years. That's great. And we don't lose that. That's there. That's why they signed a massive supply agreement with Kazatomprom. But the US has gone from being a steady Eddie market to now all of a sudden being this is going to double. And it's a high growth market. And the folks who are coming in, the Bill Gates of the world, the Dow Chemicals of the world, who are coming in to build the next generation of advanced reactors in the US, they're the ones saying, we need domestic fuel to make the hundreds of millions of dollars of investments that we're going to make in building the next fleet of these small reactors. We don't want to be dependent on Russia. So now the narrative has changed.
I agree with Amir that the uranium spot market has become more dynamic due to the influence of entities like the Sprott Physical Uranium Trust and Yellow Cake plc. Their investment has indeed injected significant capital into the market. However, I would argue that while these entities have played a role in driving up the spot price, other factors such as supply constraints and increased demand from the energy sector are also significant contributors to the current market dynamics.
Financial intermediaries, trading houses, banks, the likes of Goldman Sachs, who used to be in physical uranium and then got out, and now they're back. So it's quite exciting, and there's a very visible market that you can see moving on a daily basis, the bids, the offers. And ultimately, there was another Swiss-based group called Zuri Invest that also launched, looking to do the same thing. I find quite remarkable about this latest rally from $50 a pound to almost $58 a pound is that during this rally, we haven't seen a single pound purchased by Sprott, which was a year ago, or the last time in the last year and a half, where we had a run towards $60, which was short-lived. That run was very much driven by the buying interest that was coming in from Sprott. But Sprott, for the last 70 consecutive days, including today, is trading at a discount to NAV, which means if they're trading at a discount to their NAV, they can't be issuing new shares to buy more uranium. So they're on the sideline. They're on the sideline, not buying a single pound. And the market has remained very strong bid, going up every day. And the equities are finally starting to kind of come to life. But the equity sentiment, if anything, as indicated by the discount to NAV of Sprott, shows you there still is some, there is a weak sentiment out there, because the equities are not anywhere near their 52-week high, even though this physical is approaching its 52-week high and probably will break it. And I don't know, we could see $70 uranium very soon, because the market could move that fast in uranium. If you think about it, the reason the market is tight is because the big supplier of uranium, the Kazakhs, and Cameco, really the two big guys, they've committed their production. The Kazakhs signed a big long-term agreement with the Chinese. Cameco's more or less sold out and has committed its uranium to various contracts. And so where does the incremental pound come from? And that's why the market is experiencing tightness, and every demand for the next pound of uranium pushes the market up a little bit more. Well, just recently, there was the World Nuclear Fuel Market Conference in Europe, and it was the most recent gathering of buyers and sellers of physical uranium. And judging by the tone of all the presentations and all the sideline conversations at this conference, there really is concern amongst buyers of uranium that this supply tightness is not problematic, but it's going to translate into higher prices. And that was fairly unanimously accepted and discussed at this most recent conference. There are bigger concerns out there in the world that perhaps equity investors are preoccupied with, and investors in general. You and I both recently saw the run that the gold price had to $2,050 an ounce. And while it's pulled back since then, we generally still have a very strong gold price. But even when it did run to 2050, it didn't translate to massive flows of equity interest in gold equities and gold stocks, right? And so I think we have to kind of just make sure we're being sensible here and kind of recognizing that There are still concerns about where we go with rate hikes. What's the Fed going to do? What's happening in Russia, Ukraine? What's happening with China, Taiwan, et cetera? There's just a lot out there on everyone's mind. Having said that, the entire uranium industry that's investable combined has a market valuation that's equal to half of Barrick Gold, one company. And so one thing that's unique about the equity side of the uranium business is that there's just not a lot of market cap to invest in. It's just so small. And that could create a situation where the equities could stage an interesting rally, because if investors broadly decide, look, I'm going to give even a small allocation of investment to this tiny sector, that could make a big difference in a sector where, again, there isn't a lot of market cap to go around that's investable. And, companies, and if you take Kazatomprom out of that, because someone might say, like, I really can't invest in something that's just single country risk. Even if that one country is a great country, single country risk is too much right now. And Kazakh risk is something that I think a lot of people are going to think harder about. So that makes even the investable universe of listed uranium companies even that much smaller. I think what's really causing this drive in the domestic side of things in the US, like we've never seen before, is actually the rise in advanced and small modular reactors. Because we've always had sort of this world in the US, which was the world of utility companies that owned the existing fleet of reactors that were operating in the US forever. And it basically powers 1 in every 5 homes in America. And that type of utility, that type of end user of uranium, really cared less about the traceability of the uranium and where that uranium came from. It could come from Russia, Kazakhstan, or the US. They were kind of agnostic to that. And I think a lot of them still are. Now, some of them do think about political risk now, or think about the negative optics of continuing to buy their uranium from Russia, where again, their purchases is basically funding war in Ukraine. But where there actually is quite a bit of focus now in saying we need domestic fuel is from the group of companies. And people have to remember, this is a different world. The world of players that are building advanced and small modular reactors is a different cast of characters than the people that own and operate the existing reactor fleet. So, for example, TerraPower, which is a company that was founded by Bill Gates and is being funded by Bill Gates and the US Department of Energy, or NewScale, or X Energy, or Dow Chemical, that's now signed an agreement to build an SMR at their petrochemical facilities in Texas. And Bill Gates is building a new SMR in Wyoming. These players are a whole new cast of characters, and they've got nothing to do with the existing fleet of reactors. And when Bill Gates made his investment to proceed to build an SMR in Wyoming, he went on national television recently on ABC Morning News Show, and he pounded the table saying, we need domestic uranium, not saying nuclear fuel, uranium. We need it to reduce dependency on Russia, and we have perfectly fine uranium deposits in the US. Bill Gates was advocating for domestic uranium. The CEOs of existing utility fleets don't go on national television, promoting domestic uranium. They don't care if they get their uranium from Russia, the US, or the Taliban. I'm joking, but they don't care. They just want the cheapest pound. So, but when you think about where the growth is coming from, for the first time, the growth is in SMRs in the US. It used to be when you asked me years ago, hey, where's the growth in nuclear energy? The answer always was, well, it's a China story. Still growing. But now, if the projections for SMR growth takes place in the US market for nuclear generating capacity will double, in the next 20 years. China is talking about building 150 new nuclear reactors over the next 15 years. That's great. And we don't lose that. That's there. That's why they signed a massive supply agreement with Kazatomprom. But the US has gone from being a steady Eddie market to now all of a sudden being this is going to double, and it's a high growth market. And the folks who are coming in, the Bill Gates of the world, the Dow Chemicals of the world, who are coming in to build the next generation of advanced reactors in the US, they're the ones saying we need domestic fuel to make the hundreds of millions of dollars of investments that we're going to make in building the next fleet of these small reactors. We don't want to be dependent on Russia. So now the narrative has changed. That coincides with the other development, which is the US government launching their Strategic Uranium Reserve, modeled after the Strategic Petroleum Reserve, and actually making a purchase, actually coming out and purchasing 1 million pounds of uranium, which UEC was the largest recipient of the award for that. We sold 300,000 pounds and helped launch the Strategic Uranium Reserve. But buying 1 million pounds at $60 was $60 million. This is meant to be a $1.5 billion program. So for the next decade, you not only have this emerging demand from the universe of small and advanced modular reactors, you have the US government that wants to buy uranium for the Strategic Uranium Reserve. These two elements are historic and we've never had before.